Hey everyone, welcome back to Corporate Decoder, where we break down the nitty-gritty of company filings. And today we're diving into Zapata Quantum Incorporated's latest report. And let me tell you, there is some interesting financial maneuvering afoot that could change how they handle some pretty big debts. Before we get into the weeds, make sure you are subscribed to the channel and join our growing community on Discord. The link is in the description down below. Zapata Quantum Incorporated has just dropped a report that gives us a peek into some key agreements they've been making. It is not your typical earnings report, but more about the operational and financial dance the company is doing behind the scenes. So what is the big news? Well, our company Zapata Quantum Incorporated appears to be dealing with some financial restructuring. They've entered into a forbearance agreement with a creditor. Now, forbearance is just a fancy word for the creditor agreeing to pause or hold back on collecting a debt for a period of time. Think of it as a temporary truce in the battle for payment. In this specific case, Zapata Quantum owed a significant amount, likely over $3 million, and they've managed to strike a deal. Around $1.5 million worth of outstanding invoices have been wiped out, replaced by something called a contingent obligation. This contingent obligation means Zapata Quantum might have to pay that money back, but only if certain specific events described in the agreement actually happen. It's like a conditional loan. For the other roughly $1.5 million, the creditor has agreed to temporarily not pursue collection. But here is the catch. This forbearance doesn't last forever. The company has to repay this remaining amount once certain events occur. And if any of that money is still unpaid starting in May of this year, it will start racking up a late fee of 0.8%. per month. That might not sound like a lot, but on large sums that can add up fast. But it is not all about old debts. Zapata Quantum is also bringing in new money. They've been selling shares of their series, a convertible preferred stock, to what they call accredited investors. These are typically wealthier individuals or institutions that the government assumes can afford investment risks. They sold 5,000 shares at $100 each for a total of $500,000. This type of sale is exempt from the usual registration requirements because they are selling to a limited group of sophisticated investors. Now, this series of preferred stock is quite interesting. Each share can be converted into 1,000 shares of the company's common stock. That's a huge multiplier. It also means these preferred stockholders get a bit of extra clout. They can vote along with common stockholders. And importantly, their shares are higher up in line for payment if the company ever gets liquidated. Think of it as preferred treatment. This conversion feature and these special rights were formalized when the company filed a certificate of designations with the Delaware Secretary of State. This document lays out the specific powers and privileges attached to that series of stock. The company authorized up to 15,000 shares of this series of stock, meaning they could potentially raise a lot more money this way if needed. Looking at the overall picture, Zapata Quantum is clearly in a phase of trying to manage its debt while also securing new capital for its operations. The forbearance agreement shows a willingness from creditors to work with the company, perhaps seeing potential for future recovery. The sale of series of stock indicates that investors are still willing to bet on Zapata Quantum's future prospects. Now let's talk about what this all means. The company is essentially trading an immediate debt obligation for a more flexible contingent one and bringing in cash by offering an equity stake with preferential rights. This is a common strategy for companies that might be facing financial pressure but believe they have a path to recovery. The 0.8% monthly late charge is a significant risk if they cannot meet the repayment obligations tied to those events. The series of stock with its conversion to common stock could eventually dilute existing shareholders if a lot of it is converted, but it also provides the company with crucial breathing room. So what is my take on Zapata Quantum Incorporated? They are navigating a tricky financial situation by using both debt restructuring and equity financing. It shows a proactive approach to managing liabilities and securing funds. The main risk lies in the trigger events for the contingent obligation and the late fees. If those events don't happen, or if the company can't pay when they do, the situation could become more dire. On the flip side, if they successfully execute on their strategy, these agreements could provide the runway they need to grow and eventually pay off their obligations. It is a calculated gamble, and investors will be watching closely to see if their bets pay off. Alright, that is our breakdown of Zapata Quantum Incorporated's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.